Good morning, Steve Freed in Chicago with the morning grain comments. Markets are lower today. Could be some profit taking after the recent vertical increase in grain prices because of Midwest dry weather. We also note that most commodities are lower. The outside markets kind of reacting to Bank of England, Norway, and Switzerland increasing rates to fight inflation, whereas the Fed chairman also shows signs that he wants to increase rates to fight his inflation number versus reality. Again, mostly food inflation, wage inflation continues to reduce disposable income, and continue to hear about higher rents squeezing people's disposable income here in the U.S. As far as weather is concerned, it looks like Europe is getting rains. Some questions about maybe some areas of rapeseed and wheat getting a little bit too much rain. But I don't think that's a key issue. We did see where rains might occur in Ukraine, and that parts of the spring wheat of Russia remains dry. Argentina's dry. Australia is getting some rains, and Canada, for the most part, has seen some rain to help their crops. The U.S. Midwest, the European model shows 10 days of dry weather, especially in Iowa, but also in Illinois, and eastern Iowa, Indiana, possibly parts of Missouri and southern Wisconsin. So I think that's going to continue to stress crops there, and next Monday we should see crop ratings decline. The GFS model does have rain in the 10 to 14 day time frame, but I think that that rain is overdone, and I think eventually what we're going to see is a drier pattern in the Midwest stressing crops. There was some talk yesterday that when we look at 2012 comparison between June and July, the USDA lowered the U.S. corn yield 20 bushels per acre. That would put us below 170 in the U.S. and take almost 1 billion bushels off the corn crop. So I don't think we've seen the tops yet in corn or beans. Wheat continues to be a follower. Russia is still offering wheat below export prices here in the U.S. and in Europe, and I think that that continues to offer long-term resistance to the marketplace. The corn and soybean export sales were delayed till tomorrow because of holiday, and I think that what we're looking at is a lower pace to meet the USDA's goal with Brazil corn and soybean prices below U.S. The only issue in Brazil is logistically, can they export both a record soybean and record corn crop? China's on holiday, so don't have a lot of input from them. But again, they're trying to stimulate their economy, but we're not sure if what they're doing is actually going to help their economy grow. So outside markets lower as Europe increases interest rates. Grains taking some risk off as we go into the long weekend and see what weather is next week for the U.S. Midwest. And export sales data should show U.S. sales behind the pace to meet the USDA's goal.